Markets are flashing signals, but most won't see the turn until it's too late. At Investing Angles, we track the shift before it hits the headlines. Today's setup could be the one that changes your strategy. Let's dive in. And as usual, we start with volatility, and today's agenda is packed. Just check in the description, and you'll see what is on the table. So let's start with volatility. This is the daily closure. So up until the last hour, the candle was fairly bearish, and I was thinking about the continuation. But right now it pulled back in the final hour and it changed a lot. So technically we still see a diverging candle, diverging indicators, and there is a possibility that on smaller frames there is a reversal brewing, but we won't be able to know it until tomorrow, until we see a strong, either strong move up or strong move down in order to cancel this candle. So on the futures, technically this candle is a continuation one and a confirmation of reversal, so the chances for a move lower tomorrow are rather high. But and we remember that the main and very pivotal information is going to be tomorrow on the weekly closure. So far, we haven't seen a confirmation for a reversal of this big green candle. And in order to do that, the index, the volatility needs to close below the low of this green candle. So if it happens tomorrow, yes, perfect. Then we are going to have a very nice flight. But if it is not happening, then bulls will be in charge potentially for several weeks. And the same situation for the futures. So once we have all information in place, we will discuss it in the weekly report, and we will also share our Elliott Wave chart, probably updated, depends on the closure tomorrow. A very pivotal for tomorrow volatility. Now let's move on to the next chapter, and this is dollar index. What we are seeing here is the dollar is critically bullish, and right now it is closing with a strong reversal candle with a strong confirmation of potential bottom, and now I would be looking for a continuation. If the momentum holds tomorrow, there is a very good chance that dollar forms the 3 white soldiers on the weekly frame, and at the same time it would fully confirm a reversal of this trend. So that's the perspective, and if we look at the chart, so far the chart remains the same. Yesterday I was discussing a potential bigger wave 2, and now this wave looks very aggressive. It might be wave 3. In our case, we would be looking for, this is if this count holds, then I would be looking for wave 3 somewhere in this area. So perhaps this would be between 102.5 and 103.2. Let me put these markers here for you for better visibility. So this would be the perspective target for this wave. All right, so now let's move on to the next subject, and today I'd like to discuss Japanese yen to see how healthy it is right now, but only from the candles perspective. This is what we discussed just a week ago in our video, and what I mentioned that yen, so technically dollar formed a very strong bullish bottom here and has a chance to rally over the yen for the next week. So this week so far has been green, and if it closes like this or pushes a little higher, we are looking for 3 white soldiers. If we look at the daily frame, yen just flipped today, or the dollar yen ratio flipped the trend bullish, so it's 8 by 20 EMA bullish cross freshly made, and the chances for a move higher are significant. So the next target to take over would be the 50 days moving average, the blue line. And the 2-day frame, which also closed just a few minutes ago, it's a strong bullish engulfing with a very good chance to continue higher. And tomorrow in our weekly update, we will discuss yen again, so the weekly closure plus the Elliott Wave chart. Now let's have a look at bonds market and see what yields are talking about. So the closure of today, very interesting. So we had technically yesterday a strong bearish move, but it was reversed today, and now we are looking for an even stronger bullish move. And this is something that would be not only on the daily frame, so we have a daily inside up candle, and we would have a 2-day frame closing with a bullish candle as well. So this is a very strong potential reversal. And on the weekly frame, no surprises here. After the weekly bullish candle of last week, we have a continuation, most likely continuation candle. And another thing that I'd like to mention here, that we also have an 8x20 EMA bullish cross here for that day on the daily frame. Now let's have a look at the chart. The chart remains the same, no changes here. Potentially, this is the 20-year yield. Potentially formed an impulse up and the consolidation down, wave 2, and now it's about to start wave 3. Well, let's see how it closes the week, and we will adjust it accordingly. So the interesting thing about TLT, yesterday I warned about this particular candle, saying that it's not healthy, and particularly the one that it was pushed below all rejection from the resistance lines. Now we are seeing a very strong bearish engulfing of this candle, signaling a continued move lower, and at the same time we have a freshly made MACD bearish cross to reinforce the move. On the 3-day frame, this candle most likely it's in neck continuation, bearish continuation candle. 3-day frame closed today. The weekly so far is tracking for a bearish closure. Speaking about the Elliott Wave chart, no surprises here. I would be looking for wave 1 and 2 completed. We might see another bounce for wave for slightly bigger wave 2 before we see a move down, but it's yet to be confirmed. And this is the chart that we've been tracking, the latest update since April 7, when we said that this move would bring a lot of headache. And this is exactly what happened. We had an impulse down, potentially an ABC wave 2, and now we're looking for another wave down, wave 3, which could be extremely strong. Now let's wrap up with bonds and move to the commodities, and we start with gold. Yesterday's warning was materialized today. We had a dark cloud cover, or on some charts you can see a harami, bearish harami, and today we have a clean confirmation of it. So there are still 28 minutes left, but I'm not expecting it to reverse here. So the weekly is still the mystery, and if we look at the 2-day frame, which also closing in half an hour, this is gonna be a dark cloud cover, a very serious one. So far the weekly is not decided yet. We might see some bounces up and down, but in general the setup is bearish looking. Speaking about the chart, so this is a very critical move right now. What is happening that gold is approaching this line 3269.27, and if it crosses this, I would say that the impulse upward would be invalidated potential impulse, and we would be looking for a red path here, or potentially a blue one as an A, B, C. Well, that's that impulse right now becomes very mute, and especially if it moves below the red line, it will be invalidated. So let's see what happens overnight. I think we wouldn't wait for a long time. It might happen in the next couple of hours. And speaking about the GLD trust, how it closed today. Yesterday we had a bearish reversal move, and today we have a continuation. So far the odds are bearish, and for the weekly frame it's still undecided. We know that a closure below the 294.53 would be bearish one, and above this line would be a bullish continuation. But it's difficult to say at this point. I think that the move is required is quite huge, and we might need to wait for another week or two until we see a bottom, or until we see a top confirmed. And another thing that I wanted to discuss today is GDX Miners ETF, and not only from the candles perspective, but also from the Elliott Wave perspective. So far I was skeptical about this potential rally because it wasn't very healthy, and it looks like we are going to see a reversal. So we have a bearish engulfing today, and the last weekly technically confirmed the reversal on this bearish engulfing. This candle might be neutral this week, tomorrow. But speaking about the Elliott Wave, it's an interesting story here. I was looking at this particular wave, and I think that GLD formed a fairly nice impulse downwards. So let me put it in a different color. So it's a very clean impulsive wave 1, wave 2, another very clean impulsive wave 3, and wave 5 as an ending diagonal. It kind of explains the very sharp move upward here, and this could be wave either 2 or B, and now we would be looking for another move down, and this move would be target, like a minimum target would be somewhere here for the blue count. I would expect wave C. This is the lucky pass scenario. So we have an A, B, C, potentially a zigzag or something like this. And if it completes and reverses here, I would be looking for another wave upward. However, I'd like to repeat that this would be a lucky path. If GOD makes it lower and it moves somewhere here in this area, I would be looking for totally different structure, and this would potentially be an impulse, and especially if this wave down is an impulsive, I would be looking for wave 3 of a potentially larger impulse. So far, let's see what the next move brings us and where GLD makes its bottom or trying to reverse. And after that, we will be discussing the next moves. Well, now let's move on to the next, and this is natural gas. So today, natural gas technically failed to confirm a bullish move, like an immediate bullish move. However, the candle was somewhat neutral, and I think that it is going to be a consolidation or a horizontal move, something like this, for example. So we might see another move down, and after that we will observe a continued move higher. So the same signal is from the 3-day frame, which by the way flipped 8 by 20 EMA. And on the weekly, I discussed it earlier that most likely we are going to see a consolidating candle, and there might be a few of them before natural gas resumes the rally upward. Speaking about the short-term chart, this is what it is, and I would say that this wave upward, it is not an impulse. Too many overlaps, and most likely from Elliott Wave perspective, natural gas would be looking for another wave down. But as the very first wave wasn't impulsive, so there is a very good chance that this could be an impulse here. However, as kind of a smaller one, and this would be possibly a bullish flag. Let me visualize it for you. So this would be something like this. That's my... All right, so that is something that I would be looking for, and possibly could be something like 3, 4, 5. So that's a very ballpark perspective. So let's see how it develops, and the target for this move would be somewhere in this zone. Well, and now if we look at the bigger picture, that's what I was talking about before. This would be potential larger flag for wave 2. However, the purple and immediate move upward is still on the table. But at this point, it's not of a very high probability. So the chances for the red for alternative 1 are still slightly better. Well, and today is May 8th. Well, that's all for natural gas. Now let's move on to the next chapter in the commodity section, and it's oil. So what we are seeing today is oil tried hard to reverse this red candle. However, it wasn't enough for a reversal. I think we needed to see a closure above the candle's high, so it didn't happen. Still, there is a very good chance for tomorrow to see this move. And on the 2-day frame, oil showed some very strong move, but again, depending on how it closes. So far, the weekly is bearish. Oh, is bearish, closer to neutral, but if oil moves slightly higher tomorrow, it will form a piercing line, and we would see potentially not a reversal, at least a bounce. Speaking about the charts, Elliott Wave, this is what we've been discussing since April 26. There is a possibility of larger impulse down, as charted in the red 1, 2, 3, 4, and 5 of wave 3. However, a break above this red line will invalidate the red count. It's still possible as an ABC here and moving up. However, there is also a possibility of a larger flat for waves A, B, and C, how I charted it here. So this would be the potential target for this move. So far, I cannot say it's entirely impulsive, so it still could be a zigzag, like impulse, correction, and another impulse. but we'll see. So far, oil is bullish, closer to neutral on the short term, but the weekly is still undecided. We'll know about it tomorrow. And talking about our three big companies, oil companies, ExxonMobil, Chevron, and Conoco, the candles are mixed, very mixed. Up until the last hour of today, Exxon was forming a very strong bullish candle, but it pulled back, and right now I'm not seeing a lot of bullishness in this candle. It's still bullish, but I'm not so sure about the momentum, how we are going to see tomorrow. The same thing happened for Chevron. It's not entirely bearish, but it's not very bullish either, so most likely neutral with slightly better chances to move higher. And speaking about Conoco, it's clearly bearish, and it was pushed below the resistance line, so the chances for a continued move lower are significant for this company. Now that wraps up my commodities discussion for today, and just a quick checkpoint. If the breakdown that we discussed up till now has helped clarify the direction or risks, let me know by tapping the like button. It's a small signal, but it helps more than you think. Now back to the charts. S&P 500. So today's was a very interesting move. Up until the last hour, S&P 500, Nasdaq, Dow Jones, and Russell were forming strong bullish candles. But in the last hour, it was a very strong sell-off. And as a result, we can see that these candles are not only bullish, but they flipped to the bearish side. And I would be expecting that they might get a confirmation tomorrow. So there is potentially a spinning top or an evening dojis for S&P 500 and Nasdaq. Dow Jones it's still undecided, but the fact that it was pushed below the low of the previous candle, it's not a very healthy sign. The same thing happened for IWM or Russell, and it was pushed just below three basis points below the high of this previous candle, and it's not a healthy sign at all, and I don't like the last second pushes. Well, if we talk about futures, on the futures it's a clear failure for S&P 500. Nasdaq is still more bullish than bearish, but again, this last hour push was really strong. And if we look at, for example, at the 4-hour frames, and I discussed this particular 4-hour candle, made a note about it on our Discord channel, saying that this is not a healthy sign, and if we don't see a reversal, and the reversal didn't arrive, so this candle didn't cancel the previous one. So now we are looking for potential sandwich here, and as we can see on the Dow Jones, this is the two-day closure today, so it looks like it's a very clean bearish sandwich. Let's see what happens tomorrow. And the weekly frame, so far it looks neutral, and we need to see a closure. So for the weekly, it needs to close, for S&P 500 needs, for SPY, it needs to close about 567.42 in order to confirm a bottom. If it fails, well, it's gonna be bearish. For Nasdaq, it's a critical to close at a new higher high. Dow Jones is well below this the level that it requires for confirming a bottom. Russell is very close. So let's measure the Dow Jones. Oh, it needs about 2.3% in order to confirm a reversal on the weekly frame. Well, that's quite a bit. So this move would be a serious one, and we would need to see a very strong rally tomorrow in order to complete the bottoms for all indices. Now let's have a look at the chart. So that's Elliott Wave for S&P 500 futures, and as we discussed since April 22nd, so far the price is well right in the middle of the target area. And if we look at this candle, so far it's a bearish engulfing for 1 5-hour frame. So if we get a continuation for the futures, we'll see it right in the next couple of hours, probably before midnight. Well, that's the perspective for now, and I'm just to repeat, I'm looking for either purple or red path here, so they might need to be slightly moved here for accuracy. All right, so this is the chart, a larger chart, but let's have a look at the smaller one. So I've been discussing this also for a while. The wave has been corrective, particularly wave A, B, and now we would be looking for wave C potentially closing as an ending diagonal, and I was expecting a higher high, and this was the chart that I shared on April 22nd. 5740 was an ideal target. So far the index made 5720. Let's see if it moves higher. However, there is a very good chance that the top is in place. Again, we would need to see a confirmation tomorrow. Now let's have a look at the closure of major sectors. And honestly, from the candles perspective, I'm not happy at all. So first of all, I'd like to point clear bearish setup. So this is staples and utilities. They formed bearish engulfings, and most likely they will move down tomorrow. Healthcare, it's likely a consolidation candle after a very strong bearish move. The chances for move lower are also significant. Speaking about consumer discretionary, this candle is somewhat neutral. The same for energy. While it pushed it above the strong resistance line, now support, the candle structure is not very healthy. Speaking about financials, it's in line with the candles that indices produced, and right now at the beginning of the day it was forming a very strong bullish continuation candle. However, it lost steam, and now it is only neutral, leaning bearish. A very concerning doji here for the technology sector, so very vulnerable. Any even small bearish move, particularly if it closes below the low of this doji, would be a reversal, potentially a strong one. Industrials, so far it's bullish, slightly bullish, but leaning neutral. And if we look at the large caps, so what the concerning part here is, first of all, is the Buffett's company. Now, a very strong bearish engulfing. If you are interested in the perspective from Elliott Wave chart, we discussed it just a few days ago. Search our channel and you will find this video. Microsoft didn't do well with this candle, although it had a very good chance to close with a strong continuation, but it didn't. Right now this is a neutral, potentially for bearish move. The same for Meta. Amazon is neutral, but has a chance to form something bullish here. Nvidia is neutral, it needs a confirmation, and Apple and Google, they are not healthy at this point. Most likely these candles are continuation ones. And if we look at the weekly frames, potentially that will be bearish closure for the weekly. Let's see. Tomorrow it looks like it's going to be a very critical closure, pivotal, and we will be looking for information from the weekly candles. And the Tesla is bullish, but very large upper shadow is not very convincing at this moment. So the candle could turn bearish if there is a very strong move tomorrow. So that's for quick overview of the large caps. And now let's quickly talk about Nasdaq. So Nasdaq formed today a potentially bearish candle, but again, we discussed already the candles. So this is Elliott waves with a very clean corrective wave A, wave B, and potentially forming an expanding diagonal for wave C. If we see a reversal here, that would be enough for strong reversal. It would be enough for moving down, and this would be the next target, 17.7K. Well, that's Nasdaq short term. If you're interested in mid and long term, I think we are going to discuss it in the weekly report and the weekly digest, which will be posted over the weekend. And the feature of the day today is Dow Jones, and its transportation index. We already discussed the candles, and for Dow Jones, nothing new here. The only thing I'd like to discuss is the potential Elliott wave. So far, this is Dow Jones transportation. I am seeing this. I'm seeing this potential structure as a corrective wave. Wave A, a very sharp corrective one, potentially zigzag, and the wave B, and now the index is struggling to form in impulse, and most likely this is an ending diagonal. This would be the counts for it: 1, 2, 3, 4, and 5. Possibly we are looking for a higher high, possibly, but it's not necessary because we already have a higher high here, and the diagonal could be technically complete. Sometimes we see a very sharp spike over the boundary of the diagonal before the move down starts, but it's not necessary. Well, so far that's the perspective, and if we see a very strong confirmation on the candles and technicals tomorrow, we might start looking for the target for Dow Jones transportation, and that would be here, at least here. So this would be the ending, it would be the origin of the ending diagonal. Well, that's the Dow Jones transportation, and I'd like to show you this one. So these are the futures for Dow Jones, and I started looking at this today, and I can see a very strong move down, possibly forming a very clean impulse here, which I marked wave 1. Then it was a very clean corrective wave 2, and now I'm looking for a very strong impulse, possibly wave 3. If futures open in the next couple of minutes and they move here, then we might see a bounce and wave 5. So everything could happen tonight, and overnight we might see a wave 1 to ABC for wave 2, and if this path is followed, then tomorrow morning we might see a very strong wave 3 downward. So let's see if it happens. So the best case scenario would be just an ABC. It would be an ABC corrective action here in blue, and after this we would be looking for a continued rally. So this option is also on the table, but I think that the most important thing is just to watch how Dow Jones futures develop overnight. If they make an impulse like I outlined here, and then we will see a corrective wave upward, then Dow Jones could be for something big and not pleasant. All right, so now let's wrap it up. If you're still watching, you're already ahead, but the next 24 hours could be pivotal. Volatility is winding up for a decisive move. Tomorrow's closure could define the next leg across markets. Dollar and bond yields are flying. The message is loud. Perhaps it's time for the stock market to finally pay attention. Japanese yen remains weak, just as we forecasted. The divergence is becoming harder to ignore. Gold continues to build bearish momentum, and the signals are stacking up. GDX Miners, watch the space closely. A strong move is coming, and it could be sharp. Natural gas, a moment of rest, but the bigger wave structure still leans bullish. Oil, despite the bounce, confirmation of bullishness is still missing. The risk of failure remains elevated. S&P 500, today's sharp pullback steered the board. Mixed signals across frames, and we are waiting for a follow-up to confirm direction. Nasdaq, the risk of a reversal is growing. The structure is fragile. Dow Jones and Dow Jones transfers. Patterns suggest a possible larger impulse is brewing. Don't dismiss it. Our weekly commodities and strategy video is up next, and it's available only for members. We'll go deeper into the macro setups, long-term charts, and what's unfolding beneath the surface. Hit subscribe and click join to gain early access to all our market forecasts, up to 3 days before the public sees them. Got questions? Drop them in the comments or join our Discord, where Master Trader Kyle and others are already preparing for the next wave. Share this video in your trading groups, Reddit, Discord, X, and other, and sharpen your edge. Like this video if it gave you clarity. At Investing Angles, we don't follow, we forecast before the herd even blinks. See you in the next one.